Hello traders, this is Blake Morrow and you are listening to the daily Roundup webinar. I hope everybody's having a great trading session and happy Tuesday to you. Back to it after the President's Day holiday. So I guess, you know, aside from the FX market, which we'll obviously talk about, one of the big developments has to be gold. And everybody's talking about gold today. And gold's had a significant rally. One of the things that we've pointed out, and let me find the chart, there it is. One of the things that we found that we pointed out, you know, last week, it was the chart of the day. Let me find out what day it was. I believe it was Thursday. If you go to the blog, any one of you guys can access this. Chart of the day, gold, February 13th. That was Thursday. Yeah, Thursday. So gold, as we noted, it's you know, it just was in a triangle pattern. It was very bullish, and it hadn't even, you know, it hadn't even broken out yet. But noting the fact that it's just been very, very resilient, and gold, you know, is breaking higher. We just hit the 127% extension at 1604. If you are a ForexAnalytix subscriber and you look at the gold update from today, gold looks set to take on the 1592 resistance and quite possibly make a run for the 127% extension at the 1604 level, right there. And we did break out and we hit it. Okay, so your question is probably, well, now what? Well, I probably wouldn't be chasing gold up here, but if I was trading gold, probably be doing something like this, looking for a dip and looking to get long again on a dip. Like I said, gold is like it's really like more of a hedge against a lot of different moves in the equity markets and the FX market. And so I think a lot of people will be trading gold, continuing to trade gold to the long side on these dips. So that's what I would be looking at with gold. Now let's talk about the euro. So the euro hit the really close to the 127% extension of this move. This is the low back here, which will be, hold on, let my charts populate here for a second. There we go. Okay, so it was the low from October to the trend highs in December, 127% extension. If you guys have been following what I do, I've been noting this support zone should contain the sell-off for now. I'm not sure that we're ready to actually rally, but I think if you're on the short side of the euro dollar, you got to be a little careful. Daily sentiment index was 7. Today it's going to be probably around 8. I would think if we hold these levels, maybe 7 again, which is extreme. You know, I'm more in the camp of let's let it break this trend line through here and then get a rally and sell into it if we can get it. Question is, are we going to be able to get it? You know, that's really the ultimate question at this point in time. The cable looked like what cable is going to make a little bit of a rally today, and then it's come off some resistance. And this is the 200 period moving average for the 4-hour chart. It's actually contained it. This also this trend line here. I was thinking that that the pound might actually outperform the euro here, just because the euro pound was near multi-year lows. But the cable actually, you know, just kind of stalled. It's trading heavy alongside the euro at this moment. Another currency that really needs our attention here is the Aussie. I know I talked about it a little bit earlier today, but I'm going to talk about it again. The Aussie, we broke this trend line last week, and we never got any upside follow through. I was long last week through this move and ended up making a couple of pips, and then, you know, just kind of leaving it alone after that. We just retested the trend line, but if equities continue to stay heavy, the risk of a break below this 10-year low here, I think, is quite high. So the bottom line is, if we break through the 66-cent level in the Aussie, you have to be really, really careful with longs. I know we're 100 or 90 pips off of there right now, but it's just something that I think we should all be paying attention to. The dollar yen really just struggling to move with yields. I mean, yields are down, and the dollar yen's pop right back up again. Here we are again challenging that multi-year trend line. It just, the dollar yen's just not being moved by a lot. I mean, equities, I was talking to some guys in my office about the dollar yen, and I think the dollar yen's being pulled by a couple of different forces. First of all is going to be the rally in gold. Typically, a rally in gold is going to bring in yen strength. That means the yen will strengthen, dollar yen will fall. And also yields. You got yields in the 5-year, 10-year, 30, all across the curve that are moving lower. Yet the dollar yen, which typically will move with yields, is not moving with yields at this moment. But the flip side to that is equities are still pretty well bid. I know we're down a little bit today, but and let's see this blue line right here. This is the 33, 35, roughly, somewhere around there. While we're above that resistance, I really don't expect the dollar yen to really trade too heavy. We really have to be above, or excuse me, below that breakout point for the dollar yen to actually take notice. So when you look at the dollar yen, you go, well, the dollar yen is holding up. Well, so are stocks. So as long as stocks continue to hold up, I don't really see the reason for dollar yen to go down. But gold is rallying, yields are down, which is a risk for, and stocks are just kind of holding up here, but that's a risk for the dollar yen. And I think if the equity markets start to weaken, the dollar yen will take notice, but that has to happen first. It's not it's one of those, not necessarily the stock market's going to sell off because the yen is strengthening. That's just not going to happen. It's the dollar yen's not going to move unless stocks really start to move lower. I got a question really quick from Shahab about crude oil. I think crude's trading very poorly. I don't follow crude too extensively intraday because I'm not trading anything right now that's correlated to crude. But the fact that the crude market could not get back above this 52 level, or significantly above 52, that makes me a little nervous about crude. You can see this is a very impulsive sell-off here. I would probably be looking at crude something like this, and I'd get really worried if crude started to break below, let's just call it, back below 50. I think that would be a very negative development for crude, because this false breakdown, I think everybody is like, okay, time to get long. And if we just start failing here, then we have a this flag pattern. You can see it play down something like that. I mean, it's a kind of a realistic expectation based on the current environment that we're dealing with. It is surprising to me, with equities as strong as they are, crude is not participating, which tells us that demand globally might continue to be weak. I think this coronavirus situation might weigh on not only GDP and supply lines globally, and it's going to weigh on GDP globally, but it's going to weigh on demand on crude. You got the warning from Jaguars, like there are no Chinese buyers and they may never come back. That's a scary comment from Jaguar. So I'd be a little worried about crude if we can't get back above like this 52.50 level. All right, guys and gals. Hey, real quick, if you are ForexAnalytix subscribers and you want to automate the patterns in play on MetaTrader 4, then make sure you reach out to us. support@forexanalytix.com is the email, or this little chat box when you're in our platform or on our website, the little chat box right here. You can start a new conversation. Let our staff know that you'd like to beta test the MT4 platform that has the integrated patterns in play. You can do a demo or live or whatever you want to do, but it is, you will be testing it. but you have to be a ForexAnalytix subscriber. MT4, MT5 for those of you that use it. All right, guys, have a great one. I'll see you tomorrow morning on the Face webinar. Thanks for tuning in, and I'll see you guys tomorrow.